We detected an unusual trade in Hess Stock worth $500,000 on the last trading day, Friday, May 3rd. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Hess Stock. Are they bullish or bearish? So that we can trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked information, to make better financial decisions. So without further ado, let's dive into the data as usual. As you can see here on the option time and sales tape, 3,000 contracts and 2,000 contracts being traded at the same time, May 3rd at 12:27. And these are for the same options, the May 17th at the 162.5 strike calls. So we need to add these contracts together, which is 5,000, and we can calculate a trade cost as well. So 3,000 contracts, they were paying $110 for each call option. So that is 330,000 for the first trade. The second one with 2,000 contracts times 105 call options, $210,000. So we add that with the 330,000 and we have a total of $540,000 here. $500,000. So this is not quite as high as the trades that we typically analyze on our website, which is higher chance of profit because it is a larger trade, but it is still unusual. If you are interested in the $1 million trades that have higher chance of profit than this trade, then make sure to go to our website. We will put a link at the top here where we share the trades of wealthy investors so that we diversify our portfolio, because not every trade works out, but when they do pay out a lot more than what we lose. And by sharing the higher chance of profit trades where the wealthy investors spend upwards of more than $1 million, we also dramatically increase our chances of winning these trades. Okay, because the trades where they spend more money, they have more information to substantiate the direction that they are trading. Okay, so that is how it increases our chance of profit, and that's why we share those on our website. So if you want access, go to our website and check that out. For this trade, because it is lower chance of profit, what we did was we simply followed the trade without spending a lot of time to develop our own option strategies. This is their trade here. You can see at the 162.5 strike calls for the May 17 options. Our position, same. These 5,000 contracts, the volume clearly opening because the open interest was only 83. Okay, and so they are buying these call options to open. And you can see that they are already profitable because they had paid $1.10 for each of these call options, right? So, by the way, Hess Corporation, if you're not familiar, is known for oil and gas, okay? And so that is another factor why this trade is lower chance of profit, because a company that is very dependent on oil prices and gas has more risk because it is dependent on macroeconomic events, geopolitical risk that could affect oil prices. Okay, so that is why this trade is also not a high chance of profit trade in comparison to the ones that we share on our website. Now you can see this trade here for these call options, clearly a bullish trade on this profit loss diagram. You can see that on this diagram here, the share price of Hess stock is represented on the x-axis here, and the y-axis represents the profit if it is above this zero line, and loss if it's below. So the blue lines are the profit or the loss. So you can see the blue line is below, goes to negative, and the purple line also is negative if the share price goes down, because Hess Corporation stock is currently trading right here at $158 per share. And you can see as it goes up, these call options become profitable. It's a positive number here, okay? And we can also see this immediately that this is a long bullish trade by looking at the Greeks here. You can see this delta is positive, so we know this is a bullish long trade. If it was bearish short, it would be a negative delta. Now keep in mind, you can see it is a negative 11 theta trade, so there is time decay, and that is the risk of trading long call options. Okay, that is why strategies matter, right? So if you are trading options, make sure that you understand the risks that are involved, such as this trade here. The break even is all the way over here at $163 per share at expiration, but it could increase profits immediately. You can see the purple line starts to increase right away, the blue line representing the expiration date, whereas the purple line represents the current date. Okay, so as long as Hess Corporation increases soon as possible without waiting too much time for these options to decay in value, then this could be a profitable trade. And notice that on the charts here, we are trading currently on a trend line. This trend line may continue to act as support, right? So this is why we have some chance here that it could bounce from this trend line. Okay, so that could be a reason why this trader got into this trade with $500,000. All right. Another thing is, if we zoom in a little bit more and we pull a Fibonacci retracement from its previous low to its previous high, notice that we are trading at the golden ratio level of 38.2%. You can see that we are right here. So there is a chance on a technical basis that we could bounce from here. So this is why perhaps this wealthy investor got into the trade, not necessarily that they have insider information, but possibly because of this technical price action that is going on the charts. Okay, so if you are interested in the higher chance of profit trades where wealthy investors could be trading on inside information, make sure to go to our website. We'll put a link at the top here, and let us know in the comments below what you think will happen to Hess Stock. Please smash the like button, subscribe if you haven't, and have a great day.